Good morning, everybody. Welcome to the Flow Show. A new week begins. Here we go again. Bit of a busier week coming up this week. A bit of data on the calendar, so we'll take a look at that in a moment. Let's get through some of the headlines and get cracking this week. Starting with a bit of data and Japanese PPI overnight coming in a little bit on the soft side. Where is it? Can't even find it. There we go. PPI month on month coming in minus 0.4% versus flat expected year on year. A little bit softer than expected as well, 0.8%. October numbers, maybe we're seeing a bit of the oil effect playing into that. That's where we're likely to see it coming in a bit quicker there. As you can see, also machine tool orders not looking too hot, down 20.6%, so quite a steep drop there as well. But Japan, like a few other countries, suffering from a bit of a manufacturing slump over there. We finally heard from someone popping up about Forex matters. Suzuki up this morning, not too long ago, saying sudden Forex moves are undesirable and that they will monitor and respond with a sense of urgency. So, finally someone having a look at the chart, it seems. It's been fairly quiet on the jawboning front. We'll see whether that's going to pick up or if there might be change in tack and just going for a bit of, let's call it thunder and lightning, maybe going for a bit of shock and awe rather than jawboning every day, every 5 minutes. That gets the market thinking interventions on its way. Maybe they're going to take a different approach and be a bit quieter and just hit the market to try and get some bigger bang for their buck. Who knows with these guys? Over to the RBA, and RBA's Kohler says the decline in inflation is to be more gradual than previously thought. The big policy question is if the RBA rate is currently restrictive enough. We know that they hiked at their last meeting and are potentially got more on the table if inflation remains stubborn. ECB's Lagarde says, this was last week, that if rates are kept where they are long enough, they will take us back to 2% in inflation. But if any major shocks come, they will have to revisit what they're doing. The discussion on PEP reinvestments is one that has to be had. That's something that's going to be coming in the future. ECB's De Guindos says the ECB will ensure that rates are at a level to tame inflation. He says that we should expect a temporary rebound in inflation in the coming months. Obviously, winter is approaching and energy prices are likely to rise, and that's going to be a big driver. Coming back to the data and last week's Michigan numbers, a little bit mixed in this data. The headline number came in softer than expected, 60.4. There was also losses for the components, current conditions seen easing as well, worse than expected, same for expectations. What's not good news for the Fed is that the inflation numbers rose. 1 year inflation coming in at 4.4% versus 4.2% prior and expected 4%. 5 year inflation also moving higher to 3.2%. So those expectations picking up, as we've seen, for not just the Fed, but for other central banks as well. So that's something we need to keep a wary eye on. Looking at some of the other comments from Fed members, Fed's Bostic says we got into restrictive territory about a year ago. He uttered last week that he thought we were in sufficiently restrictive territory, that language that central bankers are using at the moment. He also sees signs that things are slowing down. Fed's Daily was out saying that policy is in a very good place, but is unsure if policy is restrictive enough at their current settings. She's not ready to say what the Fed's next move will be, but doesn't know if they're done hiking or not. Says a strong economy and sideways inflation could warrant the Fed to raise again, and the Fed would need to take note if financial conditions eased further. Coming over to some of the other headlines in the auto sector in the US. Honda has apparently given their US factory workers 11% pay rise following all the UAW stuff going on in Detroit. However, production workers at Ford's plant in Louisville and Kentucky, these are just production workers, have voted against the new labour deal. However, skilled trader workers have voted for the deal. So there's still some messing around going on in the auto sector in the US. We had those bumper pay deals apparently being agreed, but it's not wholesale agreed. And as we said, when you get pay rises coming in of 11% plus, that's going to be seen in the pay figures to come and their inflationary aspect as well. On the geopolitical front, this meeting between US's Biden and China's Xi is set for November the 15th. That's going to be on the sidelines of the APEC summit. And late Friday, Moody's decided that they were going to release their latest report on the US outlook, which was changed from stable to negative. They did reaffirm their AAA rating, though, so they haven't lost that just yet. They say that the risks to the rating for the US come from deficits and political polarization, whatever that tends to mean. We know what's going on with the election next year. But anyway, holding the AAA, not too much market reaction now. These downgrades don't really have an awful lot unless they lose a rating, which can then force investors to exit out of assets that aren't rated high enough. Some funds will only rate in AAA. Some funds will only invest in AAA rated assets, so it can cause a bit of a outflow. We've also got the potential for a partial US shutdown again coming towards the end of this week. It continues to be kicked along the ground. We've got that new House leader in play who's put forward I won't call it a bill, but a plan to get some short-term funding in to see us through to the new year. But that's going to pass all the relevant stages. So expect those headlines to pick up once again as we tick through the week. Okay, you're here. Morning, mate.
Hey, good morning. Good morning, Ryan. Good morning, everybody. Yeah, what's up? Eating something and lost track of the time then.
No, he's not here for the moment. I'll see him in the background. But
no, I'm here.
Can't hear him.
Oh, can you guys hear me?
Anyway, he's there. He's in the background. I'll let him wave.
Yeah, I mean, everybody else can hear me.
Right, let's have a quick look what's coming up this week. As I said, a bit of a bigger data week than we got last week. Others can hear you. Why can't I hear you? Let's have a look. Why can't I hear you? Speak again, mate.
1 2 1 2 testing.
Yeah, I've got you now. I don't know what happened there. Don't know. I was the first one in this morning. Then Steve came in. Didn't see you, but I can hear you now. Okay, right, you're here. Oh, good. Right. So as I was saying, let's have a look at what's coming up this week, and we'll get stuck into some prices. Tomorrow, the big number is US CPI. That's going to be coming in. I've just noticed those times haven't adjusted for BST and the US clock change, whatever. So take an hour off these numbers. US CPI is 1:30 p.m. UK time tomorrow. Also, the start, as you can see there, of some housing data. Sorry, that's not housing data. That's on Thursday, I think, the housing data. Anyway, so small business optimism index as well tomorrow. Zoo survey from Germany. We'll see how crappy things are over there. Wednesday's quite a busy one. We're going to have Japanese GDP coming in, wage price data from Australia, some Chinese data, retail sales coming in as well from Europe, France, CPI, PPI in the UK, same for Europe as well. PPI in the US, retail sales, and the first manufacturing data for the month for the US from Empire State. So a busy old Wednesday coming in there. On Thursday, next round, keep an eye on those jobless claims again and those continuous claims. Philly Fed manufacturing, so the second data point of the new month there. There's the NHAB housing market index. That's going to be closely watched for November numbers. Took a bit of a dive in last month's reading. Then on Friday, more data for the UK retail sales there as well, and Eurozone flash CPI numbers there, the pan-Eurozone number there as well. And then housing starts and permits. So busy old week to come. It's all going to focus around what happens tomorrow. I think with the US CPI data, it's going to be the big number of the week. Going to see whether the Fed needs to get a bit more hawkish or not. Anything there, Kay? You're going to be keeping your peelers on?
Yeah, I mean, you've got the US CPI, the US retail sales out. Then we're going to have a look again at how those continuing claims evolve later on. So it's going to be a pretty busy week, and a busy week for the sterling as well. Yeah, I mean, it's going to be interesting. By the way, did you mention that Japan's top finance guy Kanda resigned? Hello, Ryan?
Yeah. Hello, mate.
Yeah.
Yeah, when was that out?
That Kanda resigned in Japan?
No, I didn't see that one. Cool,
well, I mean, I missed it too somewhere, and it came out overnight. That State Minister of Finance Kanda submitted his resignation. So I missed that too on the headlines, but that's well, I mean, not that the yen took any notice of it, or is it even the reason why it's even weaker this morning? So yeah, that's a bit of a biggie. Apparently, him and his companies failed to pay taxes on fixed land and property. That's the guy who is State Minister of Finance, right?
Oh, and he's failed to pay taxes. Oh dear, oh dear, oh dear. So yeah, no doubt had to fall on his sword on that one. Yeah, no, I didn't. Quite amazing, really. We keep our peelers peeled to a lot of news, and that one slipped under the net.
Yeah, yeah, absolutely. I missed it too. But, and not a lot of main wires reported on it.
Yeah, all right, we'll keep an eye on that one, see if there's who the replacement is.
Yeah.
It steps up to that one. Yeah, it might be a reason why it's weakened a bit, but it'll be out with one, in with the new one. So there shouldn't be too much change from the rhetoric, I don't think. We just have to see if the new guy is stronger or weaker than Kanda was. Maybe that's why he's been a bit quiet of late as well. He's had all that crap to deal with.
Yeah, probably.
So yeah, but yeah, Suzuki popping up this morning. First time in a while we've heard from one of those bods talking about FX. Pretty weak, really, wasn't it? The jawboning from him. Nothing excitable. Nothing that anything we should be worried about.
Well, I'm actually, yeah. I mean, they probably are all a bit on the sideline now with the Kanda story, perhaps. Yeah, it seemed weak, but then we only get the translation, right? So
yeah,
and also we have been saying perhaps it's a bit of a wanted new tactic not to say much, and then we will see all of a sudden them coming in. And I mean, everything's possible there.
Yeah, exactly. And as mentioned, yeah, we are seeing fresh highs in dollar yen. Broke those previous highs late in October. So again, we're knocking around just shy of this 152 level, which if you look on the wider chart, we'll see the importance of all the levels up here at the moment. Got a big fig just above as well. But yeah, we've got some big moves happening here. This one looks, it's a different, I pointed out last week, it's a different situation to the move previously. That was a hard and fast move. This is a bit of a grind move. And again, it's not really giving much back in the dips thus far. So sitting here right now, if I had to put my hat in the ring, I'd say that there's a greater chance we break up through this 152, unless something really changes or they come and throw a few hand grenades in the mix. So yeah, I wouldn't be surprised if at some point we have a good old crack at that 152 area. And we know there's good amount of stops sitting through there and 152.10. So we could get a little bit of a flush through. Will it be maintained, or will we have similar to what we had at 150, 151, where we went through and then suddenly someone got a bit nervous and we saw a bit of a drop? So it's still in the frame of mind where you don't want to really buy it at the top, but you don't really want to short it up here because of the grind. So still a bit of a neutral situation here. I think it's probably better value looking around the other pairs. I'll let Kay look at Euro Yen maybe in more detail, but certainly Guppy's looking a bit more cautious up here. Got a couple of levels just to keep an eye on. We've got a potential triple top forming up here into this 186 area, which has been a bit of a stall point after the prior break above. So that's if it break there, it might have again a few stops sitting up there, might push us back up towards those highs. But with all that UK data coming this week, this might be a pair to look at for a bit of a decent dip. If the data's soft, if the yen is still weak, you might get a bit of a counter trade to look at for that one. Elsewhere, really, the yen's doing a lot of the work today. You know, we're seeing, as I say, these yen pairs higher. It's holding the majors up as well. It's not a dollar move at the moment this morning. What's happening in the yen is keeping euro dollar up, cable up, Aussie up. So it's not wholesale dollar move. That might change as the US comes to town. We flip the switch maybe between trading more dollars than we do yen. But certainly in the early battles this morning, as you can see, euro dollar is looking quite well supported. But here we are, knocking ahead on the 107 level again. And we get to see whether we get another break above there or if that's enough for now. As I say, we'll wait and see what the Yanks have to say. I'm not doing an awful lot so much this morning, particularly ahead of that CPI data. We're all heavily data dependent at the moment, so really got to roll with the punches. If that CPI data comes in much softer than expected, then we're going to see the rate cutters playing with their balls again, and not those type of balls, guys. The balls, as in sports balls. So yeah, we're going to see yields probably coming off the dollar, suffering a bit, and rate expectations or rate cut expectations picking up. But if it's a hot number for CPI, then the higher for longer mob are going to be back in, and Powell's going to be justified with his stronger line as he was last week. Kay, you got anything in particular you're spotting at this morning?
There's a couple of things, but they are relatively minor. Just wanted to reply to Charlie asking the question why we don't want to short dollar yen because of the grind up. When it grinds like this, especially in the yen, which can do that, Charlie, there's very little that we can do to go and stand in front of it. As we've already said many times, it looks as if you want to be long yen, any currency really against it, or perhaps like the exception of Swiss franc or so. But if you want to be long yen and the market grinds like this, you're going to be sitting there. If they don't intervene tomorrow, it may be 152.10 or even only 05, and we have seen this grind higher. So it's very hard to go and stand in front, because really when you stand in front with the way that Bank of Japan is handling their normalization process being so slow, it's not, there's not really a strong case to buy Japanese yen right now. So and that's the reason why it can continue to grind up this way until the market tests the Ministry of Finance. But are you going to go short today, tomorrow, the day after? Who knows? You know, we've been saying this grind. We've been talking about it actually since we started to break back above 150, and after the Bank of Japan, and it's just non-stop, right? So if you go against it, what's your the only thing that you hope for if you go long yen now is for an intervention, because if you're even going long here, and let's take dollar yen for the sake of the easier pair. If you sit here, you're going to pay 4.5% or so away every day in funding. Well, I mean, a percentage of this, a fraction of this, I should say. But every day, once long yen against the currency, you pay away funding, right? Because the yen has such a low interest rate, and that's why when we are in this grinding scenario, unless there is really a catalyzer or catalyst to go long yen, I mean, it's a bit useless to try and fight it. And on the other hand, going long here, dollar yen or short yen, we are at very lofty levels against most currencies, and we run into it's very dangerous because the MOF could intervene anytime unless you have like guaranteed stop and reversals on the dollar yen. It's really a currency where if one's not in a position for a longer period already, and that is in that case short yen, it's very hard to start to take positions right now in yen pairs.
Yeah.
I just, as I said in the room this morning, I trade around options, and options is well, so far I've been trading short yen via the options, and it's been quite good because you can trade around the notional and hedge the option here and there. But I would not like to have cash, because imagine that I was long cash and the MOF intervenes, I would be sitting here looking at a possible gap of 100 points or so before even a stop loss could be executed.
Yeah, for me, it's purely a question of risk reward. What is your risk reward in trying to short this move all the way up? I mean, the pullbacks that you have got are what, if you're lucky, 35 pips, 30 pips, maybe 40 pips. You know, some of these moves, 69s to 30s. You know, 39, 40 pips. That's if you catch the very top and get the very bottom. Us traders, we're probably going to be 10 pips off the high and, 10 pips off that low. So now you're playing with 20 pips that you're trying to grab, which if you're a scalper, fine. If you've got your levels, then go for it. But there's no risk reward. If you're wrong, then you keep being wrong and you keep being wrong and you keep being wrong. And you may only burn 10, 15 pips being wrong, but over the course of 2 weeks, it adds up. So there's no risk reward for this move. There's no risk reward. I tried to short up here in this move because there were certain factors in play. We'd just come over the FOMC, we'd come over other bits and bobs, and I saw no reason why the dollar yen should be as strong as it was. So I started shorting it, and I got a bit of money out of it. But that was purely a play, month end and things like that. I had reasons to short this, and the speed of this move gave rise to having a go at shorting it. But this, I just won't touch it because it doesn't give you anything. So you've got to work really hard to grab these little dips. And as Kay says, if you're having to wait, you go 10 pips offside over the course of 5 hours, you go 15 pips offside, 20 pips offside. 2 days later, you're 30 pips offside. And then you're trying to grab a 30 pip dip, and meanwhile it's costing you on your funding. So purely risk reward, it doesn't seem sensible to try shorting it.
And by doing and by trying this too often, even with some reason, but looking in this grind, if you are in a grind like this and you're trying this too often, it's not only costing you money in the end, but it saps your energy as well, and it's not worth spending the energy and the stress in your account to do it right now, unless you go like, okay, I think they intervene, but that's just a bet. I bought some downside this week because there's a lot of numbers coming out as well. So I do think that there is a risk for them to intervene if we get like a spike in the dollar all of a sudden, if the numbers are still looking up, or if the market gets a bit nervous about the CPI or so, and that increases the chances for them to intervene. But my risk is just contained. I know how much I paid for my put, and that's it. And I won't even look at it unless we really get a pretty severe drop. So it's a different approach. But I wouldn't take, as what I was saying last week as well, I wouldn't take any cash position. I think we lost you, right? No?
Yeah, I'm here, mate.
Oh, okay.
Yeah, I'm saying I'm slightly different. I might take a short cash position, but I'll pick my levels. You know, I've got this big 38.2 multi-year fib sitting up here, 152.76. So if we get a fast blow through 152, you know, some stops hit, and, you know, it's more like this move here, a sharper move up, and it hits a tech level, fine, I might have a go at it, because it will be, you know, what goes up hard and fast might come down if on the first test, might hit it, and you see 40, 50, 60 pip drop back. Yeah, it's all about risk reward, and this to me is just banging your head against the wall. And you've got to, you know, it was the same when we were down at 150, you know, just banging along there. There was no real risk. So you set up for shorts if you want to try shorts in here while it holds, then you set up for a break trade, and that's the way you do it. But yeah, just very tough at the moment. This one, that's why, as mentioned, there may be better yen pairs elsewhere to have a look at. Vermanta says, what was the reason for a change in the S&P overnight swap? I don't know. I haven't seen anything coming about that. It could maybe be to do with that downgrade news. Just as I said, you know, investors may want a bit more of a premium now for US assets with that Moody's move. But I don't know. You probably have to check that with your broker. If it's a positive swap for shorts and you're happy to short it, well, then all the power to you, mate. You're earning a bit while you're shorting it. So, yeah, and if anyone's got any ideas, if they've had a notice from their broker, then just let us know. Kevin says the PO on his 15 moves up is different as well. One a sharp move and the second one more stair stepping. Yeah, it is just on the grind and creeping. Right, just before I hand it over to you, let's have a look at Ali. What's he up to today, our mate Ali? He's long dollar CAD 137.97. What do you got on that? 40 pip stop loss, 30 pip take profit. Yeah, well, you're right on it at the moment, mate. You're right in the middle there. Any reason for the trade for that one, Ali? Just what are you seeing, mate? We're obviously getting a bit of resistance again into 38.20 after Friday's spike above. So, you know, the battleground, but it's keeping the momentum going. We're seeing higher lows, so that's good news for longs anyway. But yeah, got a bit of a pivot here at this 138. Obviously, keep an eye on oil, see what's going on there. If it takes another leg lower, that looks like it might be the kicker for this pair going higher if there's nothing else going on in the dollar. So good luck with your dollar CAD today, mate. Yeah, Kay, got anything you wanted to have a spy about?
Yeah, it's going to be a quick one today. I mean, we are in preparation really for what's going to come, yeah, on the CPI and on the retail sales. So it's gonna be a light one today. But I mean, when not a lot is going on, it's always good. Those are the days you want to prepare for the rest of the week. So you always even when things are not moving a lot, you always have something to do. So clearly, so we are going to probably, and I'm just going to look at the 10-year because I'm not going to look at everything. But we do have a bit of news data out this week, so we need to keep an eye on what's going on the yields. And let's take the 10s, right? So it's clearly going to be about that underside of the latest rate in trading, and give and take 450, and that's where we will have to see where the 10-year yields, to take only this example again, are going to close the week, I guess, or let's say after the retail sales, most likely. Take the combination CPI and retail sales. So there's the 450. Here we are, back above that longer end, but I think this is very, very neutral. You could take a bit of a resistance perhaps just in those low 470s, but it's really going to be about what's happening between 450 and 480. If by the end of the week we start to get even close here, and we close the week right here, I think is going to be relatively important, because that means that this whole zone here was just a retracement zone. Don't forget, the Treasury is still going to offer issue bonds and things. I mean, today is very light. It's just bills today, but I think by next week they will start again offering more of the longer term bonds, like notes and bonds, for instance. So this is to prepare your week. You look at the important levels, really the outside levels. If we start to break here, you can actually confirm it. But this would already be a pretty decent move, and psychologically being below the 450 will likely set some wheels in motion again if it would trade down there. Euro dollar, not a lot to say, although as Ryan was already mentioning, it keeps on finding bids in that 106.60 zone, right? A bit like the sterling, as we seen on Friday. We had was it Friday? Yeah. We had this test under 122, the figure, trying to break this little trend line here, trend line support, went below. That was into the fixing, if I recall well, and that was it. So this is probably your new 121, or at least your intermediate 121 on the cable, and we are moving a little bit higher. Well, I mean, the reshuffle and things, it doesn't seem to annoy or to alert the markets quite a lot. So top side here, 122.65, then 122.80. There's a bit of a zone. We could just be trading around in that zone a bit sideways. But again, your outside levels here would likely be again around 123 figure 10. And then, as I said, keep an eye on what's happening 122 and take a confirmation level 121.85. So that's your range or break levels over here. So those are the ones that I'm going to watch. But I want to have a look at something that's been quite well documented in our room and discussed by a lot of people. And if you are having a bit of a negative feel towards the Canadian dollar and want to keep the dollar out of the equation, the US dollar, because there's a lot of data coming out. This one is an interesting one, and as a matter of fact, I tiptoed in there myself. I stopped on a bit of a crossroad here. This Aussie CAD, this is it. And if we look further left on the longer term, it's been. You can identify this zone as well, somewhere between 87.5 and 88, as being relatively important. Not like your main importance. It's also not your main traded cross in the market. We have to. It's a bit of a cross where for specialists also. But it held this zone after a tryout on Friday. Towards the close, but that's just the Friday close, I think. But it did hold around 87.75, 87.70, and we are starting to show signs that this could be in a bit of a recovery here as well. Keep an eye on what's happening around 88, 28.38 if we get back up there, but it still looks a little constructive, this one, okay? So a couple of people in our room have highlighted this at the end of the last week. So if we start to get higher again, it's going to be a bit of a team effort there. Another reason for joining us, because there's a lot of ideas, not only on Dixie or dollars or whatever, but in all kinds of pairs. Gold. I was a bit, I was too early here. I thought we would straight away go down, but then we had this last recovery up into the 2060s. But this 19, sorry, this 1963-68 is now seemingly building as a pretty decent resistance. We stopped on the 200-day moving average, which is around 1935, but we are not bouncing too much. We had a little bit late bounce on Friday, and then this morning we tried, but it's not bouncing too far. So I think for as long as we are under this 63-68 zone in gold, I would argue that there's a fair possibility that we are going to go a little bit deeper. 1920s, possibly. But of course, the big zone here will be around 1900 again. 1910. This is really where you want to get very interested in what's happening here. Unless Chinese or whatever start to really buy it again, I don't see too much of a reason. It's been a safe haven kind of trade, and yes, misery all over the place is still going on, but the market tends to relax after the initial thing when conflicts are relatively contained right now. It tends to give up on those safe haven trades and reassess. So in that process, it could still come down to low 1900s. Of course, if the situation aggravates again, this could start to fly again. Interesting one is that silver as well this time followed through, and we went to test the 22 support. We're hanging just above right now, around 22.10. On the tide, I'd say 30.40 is your 22, 30, 40 is your resistance, having broken the support now. 22 is your support. I wouldn't be surprised if in line with gold, there's a bit more to the downside in here, perhaps a few stops on the 22, taking us down to 21.70. But then it's all going to be down to the data, what the data tell us, right? If we get decent data out of the States, don't forget this is an industrial metal. It actually holds up better when the data are relatively good. Of course, if the US yields start to ramp higher, it could trade a bit lower, but it should do better than gold if that would be the case. For the time being, I'm really patient to see what I have to do with my longer term position, whether I should add or not. A close or move back above and hold back above this line is probably going to push me in buying some more back again of this silver. And really, that's mainly it. Yeah, dollar China, I'm lurking. I was hoping for this to get a retest here in those 733s, but I'm not even sure we're going to get it unless we get like a really strong US data out later this week. As I was saying, I'm slowly starting to change my view a little bit on the Chinese yuan. So I'd really like it to see a retest here up in those 732, 33s to really confirm that we may start to set a real top here in place. Yeah. So yeah, as I was saying, I'm rather doing a Canada cross than really dollar Canada. But yeah, your support zone here, Ali, should be around 60-70 on the dollar CAD. So a renewed move below there would not be looking very good. Ryan, I'm going to stop it here for today. I think we are going to have much more interesting things to talk about as the week progresses. Back over to you, my friend.
Yeah, thank you, mate. Yeah, Horatio, can we elaborate on how to properly prepare and compose a trading plan? As I said in my reply, depends what you want to do. So let us know what you're looking at, because you can have different plans for different situations, different assets, different time frames. If you're talking just generally, there is only two things that go in your trade plan right at the start: where you enter and where you're wrong. that is it, and how much you're going to risk being wrong. That's really all you need at the start. But from there on in, depends what you want to do. If you're scalping a level, then you have an entry, you have your risk, your stop point, and that's it. If you're trading longer term, then you have to maybe spread your trade out over a wider range and look at different levels and so on and so forth. So have a think about it, and give us maybe a bit more of what you're looking to do, Horatio, or what time frames you're looking at, that sort of thing, and we can maybe answer that in a bit more detail for you. And we can do that obviously through the rest of the week. Yeah, so we've hopefully got you set up for the week ahead, the data to come. Yes, mate.
Yeah, we've got a question about Brent in the Q&A. You want to have a look at it?
Yeah, I'll grab it. Yeah,
Huh?
I'll grab it if it works. Can you see my screen? Okay.
Yeah.
Good. Okay, so let's have a look at Brent. Obviously, a lot more people look at what's going on in US oil more than Brent. But the pictures are pretty similar, although we've not quite had as much of a pullback in Brent as we've seen in the US, but it's doing a similar thing. Obviously, this one's got a bit more focus on what's happening in the Middle East, which by the by looks like it's being contained in its own bubble with no spillovers thus far. It isn't bouncing too well though at the moment, so it's still looking pretty bearish, but shorter term, just over the last few days, we've made a bottom, we're stepping it up, so there is some signs that we got a bottom in play. Whether we can get back up to this sort of 85-ish area, that's probably going to be your key level, maybe against this 83s, this former support down here, but it's looking short term more constructive than it has over the last couple of weeks, but you really need to start breaking some levels. This is why I use things like fibs. I'll just chuck a rough one in there. There. So yeah, you know what the short-term trend is. Till you start breaking up some of these fib levels, then this trend remains in play. But at the moment, as I say, we're stepping up the higher highs, higher lows. You want this move now, if you're looking for longs, to break above this prior high 82s, keep the formation going, keep the pattern going. But as you can see, it's a long way to go until we start taking out some of the key trend levels that needs to happen. And just to flash that back over on oil, similar picture that's happening. So it stopped going down. So if you're looking for longs, that's your first reason, but it's got a lot of work to do. So I hope that's helped you along the way. And anyway, we shall call that a day for today. As we say, getting set up for the week. Lots to happen tomorrow, going to be a busy one. So stay tuned. Don't forget to catch us on the Face Show as well. And as Kay mentioned, in our chat rooms. So have a great day, a great week all, and we'll see you all tomorrow. Okay.
Have a good day.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.